What up, YouTube? It's your boy Charles Enoch. I just want to let you guys know I'll be MIA until next year. But I want to leave you guys with some of the best velocity banking videos of this year as a recap. So remember, smash that like button, and I hope you guys have a safe and happy holidays. Till next year. So you might have already heard it in my intro, my voice is shot, but I'm gonna continue to preach this knowledge. So today's video is probably not gonna be that long. But before we get into the subject, you already know your boy has to do the YouTube thing. So you know your boy's close to getting monetized, so I'm gonna ask you guys, help a brother out. Go ahead, smash that like button, make that thing turn blue. And if you're new to the channel or you just haven't done so yet, go ahead, take a little time, hit that subscribe button for me. Also, don't hesitate to leave a comment about the video. It helps me for feedback. I appreciate anybody that does all these things because it does help me reach a higher audience base. So anyways, my girl and I, we went car shopping, and it's probably one of the worst times to go car shopping because of the car shortage. But we're down to one car, and I've been working from home for 1.5 years, so it wasn't a rush for me to get another car. So now that I have to go to the office in September, a second car is needed. So we end up getting this ruby red 2020 Mazda 6. So I'm gonna let y'all check out a couple pictures. And y'all know I'm not a car person. So if it was up to me getting a car, I'd probably get like a little Toyota Corolla and just keep it moving. But my girl, she liked to be a little flashy. You know, she deserves it. But I want to show you guys my velocity banking strategy in regards to how I'm going to pay this car off. So you know I got the whiteboard in the back. So let's get down to business. Let's go. All right, so we're on the whiteboard. We're going to get down to business so you guys can see a little bit of my financial situation here and how I'm going to pay this car off. So the income per month, I get about $6,000. That's the rental properties, my employment, everything kind of roll it all into one. The expenses, try to keep them pretty low. My expenses are $3,000 per month. So my cash flow is $3,000 every single month, round or about there. So the cost of the car ended up costing us, with all the fees and everything, $27,000. So one of my credit cards has a $20,000 limit on it, and the other one of my credit cards has a $9,000 limit on it. Both of these credit cards right now, they're offering a balance transfer. And it's a 3% fee for the balance transfer, and it's a 15-month zero interest rate. So these are the tools I'm gonna be working with in regards to velocity banking and paying this car off pretty quickly. All right, so we're on the other side of the board. And again, I'm just gonna break it down into 7 simple steps, how this is going to work here. So step 1, I'm gonna pull $19,400 from credit card 1. So credit card 1, remember I have a $20,000 limit. Credit card number 2, I'm gonna pull $7,600 off of that credit card. Now, for step number 3, we got to calculate that 3% fee. So the 3% fee for credit card number 1 is going to be $582. So you're going to put that $19,400 times 0.03, and this is how we're getting $582 for the fee. Now, for credit card number 2, the 3% fee is going to be $228. So again, we're going to take the $7,600 times 0.03, and this is how we're going to be getting that fee of $228. So step number 3, we're going to see the total debt is going to be $27,810, and $810 is going to be of interest. So the 582 plus the 228 is going to equal that interest. So for step number 4, what we're going to do, I am going to save the cash flow for 9 months. So my cash flow is $3,000. So if we do 3,000 times 9, that is going to be $27,000 that pretty much I have saved up. Now, the thing is, what happens in real life, I still must pay the minimum on the credit card. So what this means is every single month it's going to say, hey, the minimum per that month is $200. So even though I'm saving $3,000, some of that is going to have to be put into the credit card just to pay that minimum balance. And remember, we have 0% for 15 months. So even if an emergency happened, and let's say I couldn't do the whole 3,000 for the 9 months, I still have 6 extra months to get it together, right? So I have plenty of time. So just know that you're still going to be making the minimum payment to the credit card, and it all applies to principal. But the whole thing is I'm still saving $3,000, and it's going to be applied to the $27,000. Now, for step 5, month 10, pay the remainder $810. So I'm going to get another $3,000 of cash flow, and I'm just going to pay the $810. Now, step 6, the card is paid off pretty much in 10 months. And again, I have 5 extra months to spare. So if something happens, I still have 5 extra months to get it together. Now, step 7, kind of where I was at and why I did this strategy instead of getting a car loan. The total interest for a 3-year loan would be $1,266.94. And this would be if I would have got a 3% car loan. So I pretty much saved money by using both of my credit cards and doing the balance transfer fee and having that 0% interest and just paying the balance transfer fee. Now, if the loan was 5 or 6 years, the interest would be even more than that. Now, a thing that I do too, since I have a home equity line of credit where I use it as my bank account. So when my $6,000 comes in, I put it all into my home equity line of credit, and then I take it out. So with the cash flow, that $3,000 that I'm saving up, I'm putting it into my home equity line of credit, and thus the interest on it is reduced. So since I can save $27,000 and just stuff it into my line of credit until month 9, then I'm saving even more money on the back end on my home equity line of credit. So this is why I choose to use that strategy and not to get a car loan. So again, this is 7 simple steps. Obviously, you're going to have to apply your method in regards to your income and expenses, and cash flow is probably going to be different from mine. But I hope this did help you guys out. Remember, hit that thumbs up button for me. If you are new to the channel, go ahead, hit that subscribe button for me. And definitely leave a comment if the velocity banking method is easier with the 7 simple steps, or if you guys are wanting me to bust out the equations, I can still do that so it can make sense to you as well. Let me know what you like. And like always, you guys have a good weekend. Peace out.